So some fantastic trading opportunities on the Dow yesterday. Some real big volatility, some massive moves. Most notably, a big 170 or so pip winner yesterday toward the close. So let's have a look at a few of the opportunities there. It's a shame, realistically, are we going to be trading on the 2 minute charts for 7 or 8 hours a day? Of course not. That's just a bit intense, isn't it? So let's break it down again. So in previous videos, we've talked about the sort of the better times arguably to trade. It was when there's around sort of more consistent levels of volatility. You're sort of looking at around the open for the US stock market and around the close for the US stock market, or into the close. So what we're looking at is around 2 to 3 o'clock. Tends to be a good time for trading, and also that sort of 20 past 7, half past 7, right through till 9 o'clock as well. And there were some good opportunities there, but it started off a bit choppy. Let's have a look at those opportunities now. It's a shame we're not talking about before them, but look, people aren't really going to be trading the Dow really early, are they? So let's have a look at what happened after 2 o'clock. And it started off with, as you can see on the screen here, we had a buy right out of the gate, 2 minutes past 2, and it was a pretty horrible trade. In fact, it went up and came straight back down again, and it was knocking us out for around about a 27-point loss. And remember, a couple of ways in which, on a rules-based approach, you can look to run these trades. As you start to understand more about the markets, you can start to, really start to read the charts, maybe use your discretion, use an element of subjectivity based on your aversion to risk. But in these videos, I just like to focus on pure rules so that it's something that a brand new trader could get straight into. And what we can look at is two distinct differences. Number one is going for a 30-point target and then trailing the stop with the arrow. And number two is just trailing the stop with the arrow and exiting on that arrow. So there's no discretion, there's no thought necessarily other than whether you want to get in and out relatively quickly or whether you want to ride trades out to try and pick up some bigger gains. And what you're going to find typically with that type of trading is, if you're going for the fixed targets, you are going to underperform overall typically, but what you're going to be is a little bit more consistent. Okay, so you're not going to win as big on some of those trades, but on some trades where you might take 30, by running the stop a bit longer, holding out in the trade, you might make less on those opportunities, maybe 10 points or 15 points. So it's really down to where you're at with your trading. Anyway, I digress. Start off with pretty horrible trade, and then we end up with a short trade as well, getting us into a pretty smelly opportunity right on the 218 bar as well. So it's not a good start to the day's session, but that's okay. Sometimes it is going to be like that, and a lot of those profits made back as we move into sort of half past 2. Big move up after the open of the stock market at 2:30, and the market really then started to rally, picking up those 30 points as well, which is great, or trailing it to the arrow for around about 31, 32 points there. So it was a nice profitable opportunity. We're going to close it off there. There's plenty of other big moves. In fact, you look at these big moves on these markets, sort of 100 pips plus on a number of these opportunities. I'm not going to talk about those now because it's not realistic to trade for 7 or 8 hours a day. You tend to choose couple of hour blocks, 2 hour block, 3 hour block, a couple of those a day, something like that. Otherwise, it can get a little bit exhausting and you start looking at boredom trades, things like that. Fantastic trades, but let's move on to what happened later on. As we get past 20 past 7, half past 7, that's when positions start to get closed out ahead of the close of the trading session, and that's when we started getting some really big moves. I mean, most notably, pretty much bang on 8 o'clock, we had a buying opportunity here. We can see on the open of this candlestick there as those arrows started. Let me just zoom in a little bit there. So the arrow flipped, arrow underneath it, pointing up. Blue line here suggesting an uptrend. Green lines here suggesting again uptrends. So all those lines are pointing higher, suggesting this market's going to go, and it did. It certainly did. There was the buy on the open of that bar at 28,689, and look, it barely looked back at all. You're out of your 30 points really quickly, literally within a couple of minutes, and that's fine if that's what you want to do. This is the benefit though. If you can hold those emotions, if you can rein it in, then actually you've gone from pretty much a flat couple of hours of trading through to closing out. Let's say you closed it at 9 o'clock, right on the close at 9 o'clock there, about the same sort of price as the arrow trail anyway. That's a 175-point winner. Would you get out of it before? And there's no reason to. The arrow's trailing up, you're constantly trailing it underneath it. You notice how it starts to accelerate as the market starts to flatten out till eventually getting us out here 10 past 9. You're really going to be out for 9 o'clock because that's when the stock market closes. The point being, a couple of different styles there. So when you're new to this, it ends up being, a relatively small winning day. You're probably up 7, 10 points, something like that. There's a lot more opportunity than that, but actually, if you're able to run those trades longer, suddenly we're looking at 150, 160 plus point day. And remember, when you're day trading, you're going to be trading those bigger size because your stops are going to be tighter. So instead of trading at 10p a point, 50p a point, a pound a point, something like that, you're probably going to be staking more, maybe £5 a point, maybe even as high as 10, £20 a point. £10 a point, 150 points, that's £1,500 potentially available from just a couple of hours trading, according to a very simple set of rules. And hopefully that's a good intro really into about what we're doing here at Trend Signal with the dynamic trader strategy, trading on those 2-minute charts.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.